Today, we're going to be talking all about 403B loans, what they are, how they work, and how to use them to your benefit. And specifically, we're going to go over the pros and cons of taking a 403B loan out. All right, so dive right into it. So what is a 403B loan? A 403B loan is really just borrowing money from yourself. So if I have money in a 403B account, I'm taking the money out temporarily, and I will be paying back over time. Now, the nice thing with a 403B loan is that they don't require a credit check, so you can get this money out regardless of what your credit score is. You don't have to go through any loopholes. It's not going to pull your credit. So they're pretty easy to access in that sense. Second is you don't really need a reason for the 403B loans. There's a lot less paperwork. I don't have to attach, proof of receipts or copies or telling me why I have the money. I just put in the request, hey, I need a loan. They give it to me, right? There's no qualification. It's my money, give it to me. That's what it is. So as far as how the loan term works, 403B loans are over 5-year segments, unless you're doing a purchase of a home and you're putting money as a down payment, then they'll let you pay back over 10 years. Otherwise, it's going to be a 5-year payback period. Now, there is interest in a 403B loan, and it's determined, based on what the prime interest rate is in America. But here's the really cool part with it, is that interest rate actually gets put back into your own account. So when you make your monthly payment back over the loan, you're paying yourself back the principal plus interest into your own account. So the 403B provider doesn't get any money on the interest. It doesn't benefit them in any way. So you pay yourself back over time with the interest. That's a pretty cool feature. Now, why would you want to take a 403B loan even to begin with? So if you're ever in a tight spot and your choice is drain the emergency savings account or put it all on your credit card, 403B loans may not be a bad option. Remember, you can pay these money back at any time you want to. There's no prepayment penalty. Interest rate is going to be a little bit higher than what the going average rate is. More than likely, it's going to be lower than your credit card payment or your credit card account. So you want to make sure. So that might be a bad option just for the interest savings alone. And while we have emergency savings on the side, it's going to be scary. If we have something big come up and we drain it all and we have nothing in the bank, that can be a really scary place to be. So the 403B loan could be a bridge, kind of help you through those tough times and preserve the nest egg for any other thing that could come up during that hardship time. Now, another way you could use the 403B loans, and what I've helped clients with in the past, is starting their own businesses. So I've had clients in the past that some had 403Bs to begin with, most of them actually didn't. So we actually took money from their Plan 3 account, opened a 403B account before they left, because remember, it's an employer-sponsored plan. The 403B has to be open before you leave. So we just opened the 403B account up. It was opened. They retired. We took a portion of their Plan 3 money, moved into the 403B. As soon as it was in there, we turned the loan paperwork, and the money came out, and they were able to start their own business with. So we help clients start driving schools, become life coaches, start their own private counseling business. So it's a lot of different things. So it can be a really good option to do that with. I started Scenic Financial by taking a look for my 401k plan. So I've done this strategy myself. It works great. And you just pay it back monthly over those 5 years. Nice thing is the money comes out tax-free. So it's not going to impact your taxes. The only time it impacts your taxes is if you don't pay it back over your 5-year period. So if you default on this loan, right, I don't pay back in the 5 years, any outstanding balance just gets counted as an early distribution. So if you're young, you're under 59 and a half, you got to pay taxes on it, and then you got to pay the 10% penalty. But it does not impact your credit score. Right? Remember, this is your money to begin with. So it just counts as an early withdrawal. It does not negatively impact your credit score or anything like that. So that's another pro with it. Now, as far as the cons, so when I'm loaning money out of the 403B account, that money is no longer being invested. So I'm not earning any money on the interest in the market. So I give up that interest. But if you're doing something like starting a business or doing something of hardship, giving up a couple of years of market growth may not be the worst thing in the world. Now, another con with the 403B loan is that they do have its limits. And it depends on your employer. First, you have to check it's even available. And most employers I've known in Washington, most of them are going to offer it. They have a max typically of 2, in some cases 3 loans total. So the most loans you can have at one time is 3. So if I have 2 loans out already and my max is 2, I need more money out of it, I have to pay off one of my other loans before I can get more money out. So it's not a revolving credit line. So if I'm going to take money out, I think I'm just taking out more than you think you need. And you can always pay it back early or put it back in if you don't need it over time. Because you don't want to be as stuck with, I took out too small of a loan, now I need more money, but I can't because I got to pay off this loan, but I don't have the money to pay off that loan. You get the gist. So take out more money than you think you need. Like I said, the interest is going to go back to you anyways. Now, as far as the loan limits, you can only pull out 50% of what your account value is up to a max of $50,000. So the clients that I help start their business with, we only put in $100,000 in the 403 account. So we get the max of $50,000 out as a loan to start their business. Save them the hassle of using credit cards, trying to get personal loans or business loans, having business plans, all kind of stuff to go to the bank and try to get approved and get their credit pulled. So it's just an easy solution for them. So the max you can get out of that is $50,000. But if you have a small account, it's only $10,000, you can get up to $5,000 out of it. So it's still better than nothing. So just know that that's what those limits are. And that's the total you can get out, no matter how many loans you have. If I only have $10,000 in my account, the max loan's $5,000. I fill out a loan for $1,000, and I want to go back to get more out, and I'm allowed a second loan. I can only get $4,000 at that time. I can't get another $5,000. Right. So remember that's going to be the max, is where the half of the account is. So that's another reason why if you're starting a 403B account, it might make sense to put some more money into it, especially early on in your career, because as it builds up, it actually becomes a backup line of credit in a sense that if something happens on the road, I can tap into it. Where the bigger the account is, the bigger loan I can take from it down the road. 403B loans, they're really not as scary as they may seem. They're actually very useful. And it's something that, if you're ever in a tight spot or trying to start a business, it would definitely consider it. I have no regrets taking the loan off for my 401k to start my own business. So if you're not ever in that position to do so, I would encourage you to check it out. If you have any questions on it, feel free to drop a comment below, and I'll catch you guys next week. Remember that your future depends on what you do today.